Now, Asia-Pacific markets declined as investors assess risks associated with the new Omicron COVID variant and look ahead to key inflation data in the U.S. Japan's Nikkei declined rather 1%. Shares on the mainland stock exchange also traded lower, with the Shanghai Composite closing down 0.1%. In Hong Kong, the Hang Seng Index fell just over 1%. Looking at what's happening in European markets, they pulled back as renewed concerns about the Omicron COVID-19 variant continued to weigh. Stock futures were little changed after investors pulled back from the market rebound earlier in the week. Stateside, the Labour Department is set to release November's Consumer Price Index, which measures the cost of dozens of items. Estimates suggest that the reading could mark its highest year-on-year level since 1982. Meanwhile, most emerging market stocks and currencies fell as caution kicked in ahead of a U.S. inflation reading that could prompt the Fed Reserve to tighten policy at a faster pace. To give us some more perspective, we are joined by our market analyst, Stephen Schultz, who is the CEO of Momentum Securities. Stephen, thank you so much for your time. Before we touch on what's currently happening in the markets at this particular point, what would you say were the key themes for the week when you look back at the trading week that was?
Let's start on a slightly more positive note. And I think for those that have been watching, it has been quite a dramatic week for the likes of Implats and Northern Platinum, who are both competing for the same asset, being Royal Bafokeng Platinum. And it's now essentially escalated into a full-blown bidding war for the assets. Without the technicalities, it looks like both of them are similar stakes in terms of shareholders, around 35%, with Implats slightly ahead, and now, in accordance with transaction law, forced to make an offer on the assets. Jury's still out as to whether Northern will also be making an offer, but I suspect that will be the case. And it's left shareholders smiling because they'll ultimately be the beneficiaries.
Right. Given how, the markets performed earlier this morning, when you look at what's happening in Asia, and again, I suppose the focus continues to shift around what's happening with the property sector, especially when you look at Evergrande Group and you look at the newest, latest company right now. How are all of these themes, affecting our local markets right now? How are we faring on the JSE so far?
I think the JSE, by and large, has been caught holding its breath. The big event is, as you've mentioned, US inflation that's expected around 3:30 this afternoon. And I think some of that anxiety sitting around US inflation, because nobody is expecting a good number, is being partially offset by new developments on Omicron, most notably the fact that symptoms do appear to be less severe than previous pathogens, the likes of Delta, for example. And it's a little bit of to and fro, but I do believe that the US inflation print is going to trump all market activity that we've seen thus far in the week.
Right. On the back of, what we've been reading about Omicron, earlier this week we had a conversation with some of our analysts who are saying that we should possibly factor in a worst case of both worlds, where, Omicron, as we start getting more, information about it, might be worse than expected, thus, suppressing growth. And then we also have to deal at the same time with increased inflation, which could affect, for example, supply chains. At the back of your mind, when you look at your screens, are you putting in those factors as well?
Absolutely. I think one does need to distinguish between the humanitarian impact, which has been more positive this week for Omicron, despite it being far more transmissible. It does appear to be less dangerous, and that it was echoed yesterday by Netcare. But on the other hand, from a financial perspective, one does need to take into account the economic and business impact, which unfortunately is still largely unknown, but is still weighing quite heavily on the economy in South Africa, and of course in time will become the case globally. Supply chains getting disrupted is undoubtedly going to have a negative impact on inflation, so we will see inflation spike as a result, or continue to spike rather. And businesses which unfortunately lose valuable revenue. The most obvious one that's already suffering as a result would be the domestic tourism and hospitality industries, which are under enormous pressure due to travel restrictions.
On the back of that, what are some of the issues that investors need to be keeping in mind beyond what we're currently dealing with, whether it's the Omicron variant or, the policy moves by the Fed? Because I can imagine going into 2022, it's a little bit hard to see where things could be, especially in the fact that we're in a pandemic and you have all these wide-ranging forecasts. You don't really know where things are going, but what should we be thinking about?
At the risk of being labelled a bit of a pessimist, I think there's a lot of storm clouds on the horizon. I think globally, we've obviously been through a very, very difficult 2-year period. But what we're seeing now is stickier inflation than central banks would otherwise like. If you look at Europe, if you look at the US, etc. And undoubtedly, in my mind, what that is going to result in the coming year is forcing many of the central banks to increase interest rates at a faster rate than they would otherwise have liked or had previously communicated to the market. Now, higher interest rates aren't necessarily in themselves a bad thing, but the effect that it has on consumers, the economy, retail, company earnings is a negative. And I think the discomfort that investors should have and should be thinking about for the coming year is safe spaces in the market, which is otherwise quite demanding from a valuation perspective. Markets are expensive, and there is definitely going to be more headwinds than tailwinds in the coming 12 months, I'm afraid.
Yeah. Would love to have you back on the show to discuss some of the opportunities you may be seeing offshore and also your assessment of the indices and whether you're starting to see the performance of the indices in the US filtering through to the broader market. Unfortunately, Stephen, we've run out of time, but that is Stephen Schultz, who is the CEO at Momentum Securities. We're going to take a quick break. When we come back, we'll have SME on points. We'll also have books on point, so stay tuned.